Welcome back to the program. Johnson Chukwu is the Chief Executive Officer at Cowry Asset Management, and he joins us now via phone. Mr. Chukwu, welcome to the program. Good morning.
Good morning, Sister Nancy, and happy birthday in arrears.
Thank you very much. Thank you very much. I appreciate that. Now, let's get started. The Nigerian economy, how far so far? Close to 2 months into the second half of the year. We're in the second month of the third quarter. What's your analysis of how far we've done?
Well, Nancy, there's no game saying that the economy is still in a difficult situation. None of the economic data is actually encouraging. If you look at GDP growth rates, if you look at unemployment rates, of course, the only thing you can say is moderating is inflation rate. We've seen a drop in inflation from the height of about 18.17 to about 17.75 in the month of June. That's the third month consecutive decline in inflation rate. Beyond that, one would say that the other economic indicators are not quite positive. They are not encouraging. Your economy is still going up to 0.51%. You see the second quarter GDP growth rate. But if you go by the first quarter GDP growth rate of 0.51%, that's still too weak for a country whose population is growing about 3%. Even the unemployment of about 3%, at 3.1% is also too high. That means about 1/3 of our young people who are able and willing to work cannot find jobs. 1/3 of the population. That's too high. So clearly, we haven't turned the corner. We are still in the bend.
So the question is really, when do we move from policy support to actual growth? And let me put my question in context. The growth we have seen so far in terms of GDP is 0.51% from 0.11% previously. That can be attributed a bit to, the policy support, the holding of hands, the band-aid or the bandage on our wrist as an economy and all of that. When do you see the economy moving from policy support really to actual growth?
Well, that will be when consumption recovers. As it stands today, consumption is going to recover. If you speak to those in fast-moving consumer goods sector, they will tell you that the consumer demand is very weak. And that will mean that income is strong and employment is high. In other countries, they have used expansionary fiscal and monetary policies to stimulate economic recovery by injecting liquidity into the hands of average consumers. Unfortunately, the government does not have the way with that to do that. The structures of our economy are also so weak that the economic structures that you use to stimulate economic recovery are not very effective here. But until we have resumption of consumption, we are not going to see, because this is how the engine of the economy works. When there is a fracture or the dislocation and the economy is no longer moving on that wheel, what we call circular flow of income, what you do, you intervene at the governmental level to stimulate or resume consumption by either going to public works. So you create a lot of employment and pass money into the hands of people who are not properly previously in employment. And they start consumption. That consumption will stimulate demand for input materials, which is demand for additional labor, demand for raw materials, demand for all sorts of input materials, which will in turn stimulate additional demand for those input materials. And then the demand for input materials will lead to production. Production will lead to demand for additional input materials. The satisfaction of this additional input material will mean that more resources are passed into the hands of the average consumer because more employment is created, and those who are now newly employed will go back into consumption, further stimulate demand, and demand will stimulate additional demand for inputs, including labor. Labor will consume more goods and services that will demand for additional production. That's how the economy works. So once that wheel is no longer moving, you need to intervene to inject it, to stimulate it back into action, or to jumpstart it. Unfortunately, like I said, we do not have, with a 33% unemployment rate, you need a lot of massive resources to go into job creation through public works to stimulate that activity or to reignite the engine of economic recovery. As it stands today, what we have seen, just like recently pointed out, cases of where government support is what is driving economic growth. Take, for instance, Nancy. the issue of the manufacturing sector. The manufacturing sector was one of the best performing sectors in Q1 2021, in first quarter of 2021. It grew from a negative, a contraction of 1.5%, to a positive of 3.4%. That's one of the best we've seen in recent times. If you consider that that's a growth of more than of about 5%. But if you recognize the fact that that was driven by the intervention of central bank, where the central bank provided very cheap capital to the manufacturing sector through the 1 trillion naira intervention fund for the relief sector of the economy, and which was lent at about 5%. That encouraged production. But that production that we took in the first quarter of this year, I need to be sure in the second quarter that there was consumption as to make it possible for those producers to go back and produce more. Because if consumption is weak, it simply means they produce in their warehouses. If they produce in their warehouses, they're not going to continue to produce. So, and that's why I said we need to get to a point where the economy is driven by consumption.
I don't know, we have so many things to talk about, and let me see if we can really break them down, across board. But before we go into the nitty-gritty of some of the headlines that we've seen, at least in the last few days, let's talk about Buharinomics, really. How far has Buharinomics worked? Some people will not give the president a pat on the back. In fact, a lot of people have said that his handling of the economy is the worst so far in the history of the country. Some people will also say, okay, fine, he has been able to rehabilitate, or is still rehabilitating some infrastructure. There's a little bit of good news coming around, around some things. But an average Nigerian will be like, if I want to categorize, or if I want to assess this administration, inflation is up there, unemployment is up there. I am buying fuel right now at a higher cost than when he came in. The debt when he came in was 12 trillion naira. Now is over 33 trillion naira, and so forth. As an analyst and as someone that talks to both local investors and international investors, as someone that also has a business here, how would you assess Buharinomics?
Yes, if you recall, we've assessed Buharinomics severally in your program. And why are you putting me still on the spot?
It's a continuous issue. It's continual. Yeah.
For me to assess Buhari's economic performance, I will just ask for the report card. And let's look at the basic report card. And I've said here in your program that I don't think the economy is the forte of the president. I don't think that amounts to criticizing the government. It's stating the fact at the time today. We have talked about unemployment rate about 3%. You've talked about inflation rate of 17.75%. You've talked about the debt, current debt, national debt about 33.1 trillion naira, about $87 billion. You talked about, if you look at even the Human Development Index, and you look at the level of poverty level, I understand based on the Poverty Watch, Nigeria's poverty level is approaching 90 million people, over 80 million, which is more than half of the population. These are facts. These are data from most of them from Nigerian Bureau of Statistics or other globally respected institutions. So that's the report card. So of course, the president said they have lifted about 10 million people out of poverty. While I will not dispute that, but the key thing is that we are still dealing with an aggregate. So if 10 million people were lifted and then 20 million people went into poverty, so what we have done is that you have a situation where 20 more people, the aggregate figure will be that 20 more people have now gone into poverty. That is, it's like the average, a lot of average. It may not represent the individual data in that average that was used to arrive at the average. But on a balance, if we have to use the economic data, the present government is struggling with managing the economy.
Okay. I would somehow agree with you in terms of if we want to take a look at Buharinomics, perhaps it's going to be a weak program because we've got to break it down, the pros and the cons. But just like you said, there is a report card that is data-backed and that is data-driven. Let's leave that for another day. Let's move over to another sticky issue. The federal government came up this week at the FEC to approve $1.4 billion for the rehabilitation of Warri and Kaduna refineries. What do you think? We're back this road again? How can we be sure that this will be done at this time, that this is the right time, or this would actually be done after different turnaround maintenances, or what do they call it? Okay, they call it turnaround maintenance or rehabilitation. Yeah. What do you think, Mr. Chukwu?
You know, my opinion on the issue of rehabilitating the refineries has been consistent. And my take is that the government has failed. And I think the minister also said that the government does not have the capacity or does not show efficiency in running the refineries. So we're going to rehabilitate and get private sector people or concession to private sector people. Why putting $1.43 billion that we don't have into refineries that you can as well sell as they are today, and then use whatever proceeds you get from that and then invest elsewhere? The key thing for me is that the government must pull out, and I repeat, pull out of the downstream sector of the oil and gas sector and allow the private sector operators to operate them. If they succeed in rehabilitating the refinery, which I can almost tell you for sure that they're not going to succeed, because I'll come back to that. Even if they succeed and we maintain the current fiscal framework we have for the downstream sector of subsidizing refined petroleum products, the refineries will still go under because you need money to run those refineries. So if they end up refining and selling their products at below market price, so government has to pay them for that shortfall, which will not be enough for them to cover their costs. So continuously, government still have to look for money to run their regular maintenance operations. But the core of the problem is that the refineries are too old, too antiquated, too moribund for anybody to invest money in them. The truth is that their full cracking systems are obsolete. They are not in tandem with today's technology. So even if you take products to those refineries, you are going to end up with output that is less than the input that you are putting there. And I remember what the former Minister of Petroleum, Dr. Chukwu, said at some point that, look, the cost of refining these products in the country, the output, that is high. The value of the output of refining product is higher than the input cost of the crude that you put into refine, because you have a lot of losses because of the technology that we have installed in those refineries. So if we know this, why are we throwing money away $1.4 billion that we can more effectively use in more pressing and more critical sectors of the economy? I think it's a wrong initiative. I think we have better use for this money, and I think the government should take the bold step of selling the refineries down as they are, and then let's use their money to put elsewhere.
Mr. Chukwu, as an investment banker, can you, as you are right now, buy the refinery the way it is right now, or the refineries? Can you get investors to invest in those refineries as they are right now? That's the A part of the question. The B part of the question, which I should think that many Nigerians should be interested in, is perhaps we need to interrogate more the state of those refineries. Because even speaking to some Nigerians that have had or that have had experience working in those refineries, a few of them over the years have told me, Nancy, you know what, we can refine the supply we need from those refineries, but some powers that be will not allow it, that they do have, you know, expertise and all of that, but because quite a whole lot of things are going on the ground, and the picture that is being painted for everyone to see is that those refineries aren't working, and those refineries can't work optimally, or that we are not capable to do some things with those refineries. Mr. Chukwu, where do you stand? Two questions. Answer the first one first.
Okay, let me start from the first question. As you know, I'm employed by a consultant, by an investor, to say I should advise the investor whether the investor should invest in the refinery. Like I mentioned earlier, the few catalytic cracking units are obsolete, and that's the core of a refinery. So if I am to advise anybody to buy the refinery, there's what we call break-up value of a company. And that is basically to say, look, if I buy this company and I break up the company and sell the assets as individual assets, not as a going concern business, what is the value of that asset? So in that case, I'm saying, what is the value of the land? Can I buy that asset as I'm just buying land and then build something else in that place? Because there's still value in the sense that it's occupying a piece of land. There are tanks, there are storage tanks that are there. It's not the key thing that you can sell that asset as a scrap, not as a going concern refinery. because the fuel catalytic cracking units are obsolete. So you have to change those fuel catalytic cracking units. If you change them, you have actually built a new refinery. So if I'm going to advise the president, I'll say, if you have to scrap the FCC unit of this refinery, what is the cost of bringing in a new FCC unit that is modern, that can produce efficiently and compete with what the refiners were? And then what is the land, value of the land where it's occupied? It's situated. And are they the tanks and other facilities there? What are their values? So it does not mean that the refinery have no value, but whether they have value as a going concern refinery is a different thing. But the assets, individual assets, they could have some value. So I can advise somebody to buy it on the basis of the break-up value of the refinery. That addresses your first question. The second aspect of your question is that Nigerians have been saying our lack of efficiency and other things. The truth is that the government in Nigeria has consistently proven that it does not have capacity to run business. Not just refinery. If you remember, we had a NAFCON, National Fertilizer Company of Nigeria, which is now in the Roma, and then we ran it down. We had Nigerian Airways, we ran it down. We had Nigerian Railways, we ran it down. So all public sector-driven business units that the government of Nigeria, not just this government, since I was born, and probably before my parents were born, have consistently shown that they have capacity, does not have capacity to run businesses. And what is the reason for this? The incentive system in the government, the public sector, does not support efficiency and competence. The incentive system, a situation where, Nancy, you don't work from Monday you come to the office on Monday, you loaf around, and then you go, you sell hair wigs, and then you say you're going to the bank, and then you won't come back till the next day. And then at the end of the month, you are paid. Nobody asks you what you produce. So a situation where reward is not tied to productivity does not allow for efficiency and effectiveness, and does not allow for people to be very productive. And that's what we have in most public sectors in the country today. We need to change that culture. We need to change that system, where the reward that people get in public service is tied to their productivity. If you do that, Nigerians will do well. The people in the private sector are not tainted. They are not imported from from another planet. There are people born in Nigeria, bred in Nigeria, but they went into a system that incentivizes performance, and that's where they're performing. If you think that, the people will perform even in the public sector. But as we stand today, we don't have that culture in the public sector, and therefore the public sector systems have not successfully run institutions that are profit-oriented. Because in profit-oriented institutions, it's all about productivity.
Mr. Chukwu, let's still stick with this refineries for a second. I must also say, and let me bring it to fore in case our viewers or Nigerians have forgotten, earlier on this year, precisely in March, the Federal Executive Council approved $1.5 billion for the rehabilitation of Port Harcourt Refinery. So if you add $1.5 billion plus $1.48 billion, I think that should be giving you $2.98 billion for the 4 refineries that we do have. So what we are saying right now is that government is spending about $3 billion to rehabilitate these refineries, and they've given phases, phase 1 and phase 2 or so, at least for Warri and Kaduna, about 21, 23 months, first phase, second phase about 33 months or so. I'm trying to put this into context so that Nigerians will understand what we're saying. Now, let's bring in the issue of Dangote Refinery. The Federal Executive Council have also said that, has approved, in fact, a 20% minority stake in Dangote Refinery, and is going to get that for $2.76 billion. So if you add $2.76 billion to $2.98 billion of the 4 refineries, that shows you how much that will get out of the coffers to issues around oil, issues around refineries. Mr. Chukwu, what's your perspective on this? I needed to drop those figures and those numbers and put it into perspective so that our viewers can really understand what we're talking about. Mr. Chukwu, over to you. $5.74 billion for the 4 refineries publicly owned, and now 20% minority stake in Dangote Refinery.
Okay, I will take the 2 of them separately because they are 2 different types of investment. In the first place, in the first instance, we were investing about $3 billion, about 1.2 trillion naira in debt institutions. on until the government makes sense. We don't need to spend 1.2 trillion naira or $3 billion in those refineries. Let's sell them as they are, and then use that money to invest somewhere else. Probably that new investment will generate us some good returns. That's that. I'm very clear on that. On the investments in Dangote Refinery, unfortunately, the government does not. There's no clear strategy that the government is pursuing. I hear the GM government is talking about energy security. That's why we're investing in Dangote Refinery. So if we're talking about energy security, that's the issue we should have been part of the Dangote Refinery when it was purchased, because it's not something that just happened that time. But my take is that I'm not seeing the figures, but there are a couple of questions I've asked those who have done the analysis on the government side in making investments. We are going to be borrowing $2.7 billion
from Afrexim Bank.
From Afrexim Bank. What is the cost of that borrowing, and what's the tenor of that loan? Will Dangote Refinery be able to generate profitability and dividend payment to the extent or appreciation in value of those the stocks of Dangote Refinery to the extent that at the maturity of this loan we are assessing, we will have earned enough from dividend income and from capital appreciation or the future market value of this investment as to sell and pay back the loan. If that is not the case, then it is not a good investment. So if you talk of energy security, I don't think that is the motivation for this investment. Because if the government is going to say because it owns 50%, it's going to compel Dangote Refinery to change its strategic intent and purposes, the answer is no. Is Dangote Refinery, has it accessed funding from other lenders that are going to put some restrictive clause or some binding clauses on its actions until those loans are fully paid back? The answer should be yes. So our 20% investment is not going to change whatever contractual commitment Dangote has entered into on the level of dividend it can pay on the finishes paying the loan, or on the charge or whatever that foreign lenders would have had or other local lenders would have had on the Dangote Refinery. So I think we're coming too late. I hope that we've done our figures like the private sector will always do before we make the leap in making that investment. But if I am one of those who believe that Dangote Refinery is too big and too important to allow to sell. If, for instance, the Dangote Refinery needs funding support, and the government is borrowing, and is in a stronger position to borrow and lend to Dangote and make a margin, I think that should be equity investment. I doubt if borrowing for equity investment, where the dividend income is not assured, to meet up interest payments, because I'm not sure. You have to look at what rate are we borrowing. If they're borrowing at 6% or thereabout or 7%, I'm not sure Dangote Refinery will pay dividend yield of up to 7%. So you are going to have a situation where government will continue to borrow to service that debt, which for me is not a good investment. Then, overall, we're talking about $5.7 billion borrowing, which we add to our current $32 billion in foreign debt. If you add it to $32 billion in foreign debt, we are almost going to $38 billion as debt of the government. So, and we are really approaching a point where debt service is becoming important to us. And which I said, if you continue to borrow and invest in instruments that are giving you returns below the interest rate you are paying on that borrowing, then you are going to be borrowing additionally to pay interest, which is the fear we have been pushing ourselves into. You're going to get to a point where our current debt will no longer be sustainable. We are really dealing with about 90% debt service to revenue ratio. And it will worsen as we borrow more. So I think government has to be more circumspect. The government of the Nigeria should focus on its core mandate, provide us security, provide us enabling environment, and then let the private sector drive the economy. You give us policy roads. If you cannot build the roads, concession the private sector is able to build and create the legal and commercial framework on whether way they can build those roads. Give us standard airports. Let people, if you can't build, bring private capital to build, but create the enabling regulatory and social environment that will allow private sector to thrive. Give us security. We lack security in the country. If you address those things, the private sector will do the investment. That's going to be started building the refinery, not with the intent to sell 20% to the federal government. To build a refinery that will be commercially competitive That's what we need government to create an environment that more. Where it's also about building a refinery. So is government going to take another 20% equity in there? And maybe Virgin Forest, my company, will also want to build a refinery, and then government will take another 20%. How far can the government go in buying equity into private sector investment instead of just focusing on the environment that will allow us to thrive and create employment that will lead this country out of the current poverty?
You know what you just said, it came to my mind. Of course, this is not the first time or the example that we've seen. We've also seen such examples, you know, elsewhere across the world. What you just said, perhaps will government go borrow, go take in equity stake in perhaps, I hope that Dangote Refinery will not be the only private-led refinery that we have in Nigeria, but quoting what Timi Priye Silva, Minister Silva said, that of course, that they would also like to have stake in this, so it's not only left by private individuals to run. But we'll look into that some other time. Let's talk about the issuance of the $6.2 billion Eurobond also that we're expecting. What do you think? Some of it will be used to finance the 5.2 trillion naira as put in the Appropriation Act for 2021. What do you think, Mr. Chukwu? 6.2 billion Eurobond, $6.2 billion, not naira.
You know, like I said earlier, we are actually getting to a time. If you look at the fiscal situation of the country, you can understand why the federal government keep borrowing. And because our revenue is far below our cost. I'll give you a classical example. Last year, total government revenue as of November was only 3.47 trillion naira. By that same November, the federal government has spent 3.1 trillion naira in servicing debt, leaving only just about 300 billion for the current expenditure and capital expenditure. That same first 11 months of last year, government has spent about 4 trillion naira in its non-debt recurrent expenditure, that is salaries and wages of government and other government running expenses. And the government spent about 1.5 trillion naira last year for capital expenses. So what that means, the government had to borrow more than 5 trillion naira to be able to run its operation. And this year is not materially different from that. At the end of May this year, the government had incurred cost of 4.8 trillion naira when it had only raised in the first 5 months of this year 1.8 trillion naira, leading to a deficit of 3 trillion naira. So you can understand why, as it stands today, the government is borrowing. And which is why some of us have said, look, we need to sit back and ask ourselves, are we going to continue this way? What point where are we going to get to and it becomes impossible to continue to borrow to run government overhead? And we have already approached that, but we still not to be taken on that. So if we don't change the fiscal framework of the country, the government will continue to go to the other local market and bond market to borrow. I mentioned earlier that our current, as of March this year, our total external debt was $32.8 billion. Throw in another $6.2 billion to that, so you have $40 billion. That's what our national debt will be at the end of post this Eurobond offer. So, and then we are gradually getting back to that point where we got to where our debt become unsustainable, that we had to go to Paris Club and other lenders to grant us debt forgiveness. Unfortunately, because we are on a spending binge, you really can't go to your lender and at the same time when you're asking them to lend you money, you're also asking them to forgive your debt. So we may not be able to, we don't have any moral right to go back and beg for debt forgiveness.